Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 29th of July. All right, now just a quick recap from Friday where we left off. The major release coming out was the US GDP numbers. Now, they came out much better than expected, and 0.3% is a big sort of move. Well, it's good enough anyway, and it goes on the back of the last 3 or 4 positive, really big US numbers. Now, what that's done is it's done a couple of things for us. It hasn't taken off the expectation for the Fed to change their mind about a rate cut. Now, when they do signal they are going to do something, they have to follow through. Otherwise, they'll lose credibility and the whole management of the economy could be sort of in jeopardy because they've said, we're going to do this, and then they flip around straight away. I think the Fed were pushed into the reasoning to cut rates, especially around these trade issues. And they are now going to have to cut. It's going to be one of those, I think, a hawkish cut where they cut rates, but they come back and say, well, you know what? The US numbers are quite strong, so we're business as usual. If anything, there's no more rate cuts coming. So what this has done for us is really light up the whole analysis for us. See all the US dollar pairs now moving pretty uniformly on the hourly and daily charts to the top side. The US dollar index itself, dollar yen, dollar CAD, and dollar Swiss, okay? And that's sort of the sentiment here. If you're wondering what that is sideways, well, they are going to cut, but it is going to be hawkish. Okay, so what we are looking for is a pretty neutral stance at this point. The good part about the other side of that is the other currency pairs, Euro, Sterling, Aussie, and Kiwi, are all really lining up to be with a move to the downside, particularly Euro, okay, which has that negative sentiment from the ECB. Sterling, it is moving lower, but don't forget we've got Brexit issues in amongst that. So that's probably not as stable as the others, but you cannot deny technically is breaking down across all timeframes. And we do have a sort of bearish or dovish central bank. Now, the two bottom ones here, this is where things are going to get a little bit tricky because over the weekend, let me just explain this first. We are starting to get the Donald, okay, as random as you like, coming back to the table. And let me just get the right page up. Okay, yeah, so coming back, what I'm talking about is basically the US-China trade talks are back on the table. There's a lot of pessimism. Pessimism. I should say there's a fair bit of optimism about a deal getting done. I mean, obviously the news services are riding on the back of the pessimism, basically because every time he walks towards the table, we get some positive stuff and then it rolls back out. But you can't unprepare yourself for this. So this is a key part to understanding what could happen. And then you come back and you think, well, yeah, we've got a really nice structure here. Those GDP numbers out of the US on Friday really give the US dollar a positive vibe. But the whole geopolitical situation, these pairs are going down, but the geopolitical situation is up for these pairs. So we could run into a bit of trouble as we go through this. And obviously, just the two outstanding core market drivers, I can't wait for both of these things to be taken out. China-US trade issue, as I said, is coming back in, and it's against the sentiment of where the Aussie and Kiwi are going at the moment. So that could be a bit of a left field event that actually blows out an opportunity if we do get developments in that. Of course, Boris with Brexit, I'm really expecting some sort of positive feeling to come back into sterling, but we're going to have to wait for some sort of result, maybe a deal to come out, maybe not. I think the fact that he's going to be very positive about a no deal may push the EU delegates into coming forward with a better deal because it may end up being worse for them. Excuse me. So what do we got as far as the upcoming events? Well, there's nothing coming out today, okay, but we do have a huge amount of major impacting data coming out, particularly the FOMC on Wednesday. That's going to be a huge event, followed by the Bank of England on Thursday. The one key aspect as well for our members, we have relaxed or taken out the rule around trading the high impacting data. So now you can actually manage your positions. I'll send out an email later on today with more updates, but you are going to be able to hold the positions through these releases now. It's really up to yourself how you manage the positions. you can get quickly flushed out on the particularly the high impacting numbers. So just be aware of that. Maybe a bit of a blessing to some, but others it could be just a bit of a debacle. But just having a look through the major impacting numbers, okay, we've got some low tier things coming out at the start of the week across the US, Aussie, China. But as I said, the major event for this week will be the Fed. Huge opportunity. Now, as I said, they are expected to cut rates, but I'm expecting a dovish to almost potentially hawkish statement, much different to what we were expecting a couple of weeks ago before we started to get that big roll on positive numbers. The Bank of England, they'll give us a better idea of what they're thinking is going to happen with Brexit. If Boris Johnson's going to go with no deal and Brexit, well, then that's going to create a huge amount of uncertainty for the Bank of England and may keep them on the sidelines, or it may give them some sort of ammunition to sort of start to manage policy ahead of that opportunity. Of course, first week of the month, US non-farm payrolls. This is the major, well, I would say the major rock and roll number, hugely volatile. There's about 4 or 5 releases coming out, but you know what? At the end of the day, we may get a clearer picture on where the dollar is going. So Wednesday, we get the potential rate cut from the Fed, and Friday, we get the non-farm payrolls. 2 big events that could give the US dollar really huge direction. Okay, I'm thinking US dollar rate cut, neutral to hawkish almost, Fed statement, and then strong non-farm payrolls. The US dollar could be through the roof just on these 2 releases alone. All right, so it's a huge week. A huge week ahead. We've got, at the moment, we do have clear trading opportunities, particularly these 2 pairs. We're going to start really looking to find entry levels, because once you see these things line up like this, it's trade time, right? And we've been waiting for this for some time. The trading opportunities on the dollar pairs, not quite as gorgeous, but you know what? It's not far off. So, analyze, get your charts ready to rock and roll. From my point of view, at this stage, the charts, are looking pretty good. Okay, we've got, you got the Aussie cruising to the downside. If anything, the Kiwi looks like the one pair that hasn't really substantially broken down yet. So if you're looking to get short a currency against the dollar, Kiwi is probably the pair to go with. We've got the Euro just trading sideways. Sterling just banging its way to the downside as, this Brexit calamity continues. Dollar CAD, well, it's slowly edging higher. And to me, on the daily, hourly and dailies, it has broken higher and we are on the move back up. You just got to keep an eye on oil. If oil continues to fall, dollar CAD is going to keep going higher. And dollar yen, well, it's a steady ride to the top side. We've got support here down around 108.40 and cloud support. Dollar's going up at the moment. Until we get something else to tell us otherwise, I think these current trends are going to remain in play. And that's where you really want to keep an eye on the PCE price index numbers and the consumer confidence numbers come Tuesday, because that, get some strong numbers there. Dollar's already going to be cruising to the top side against all those other pairs. So at the moment, pretty good trading setups. We're just got to get into the trades and go from there. All right, guys, that's it from me. I'll give you more updates on that rule change over the next, over today. All right, guys, have a good one. Cheerio.